Now, data released this week showed how some sectors of the economy still remain under pressure. StatsSA released mining and manufacturing production data that points to weak first quarter GDP growth. The South African Chamber of Commerce and Industry also released March's Business Confidence Index that also declined, reflecting a weak business climate. There was, however, at least one positive announcement of investment into the country.
Mining production continued on a downward streak in February. StatsSA reports that mining production decreased by 7.5% year-on-year for the fourth consecutive month. Analysts say the mining sector continues to be plagued by electricity supply constraints, rising administered prices and waning productivity rates. This impedes its effective operational performance. They say a rebound in March seems unlikely given the intensity of power cuts during that month. Manufacturing production did, however, increase slowly by 0.6% annually. The largest positive contributions were made by food and beverages and petroleum sectors. Economists at Nedbank say these figures confirm the persistent weakness in primary and secondary sectors. They say the economic recovery probably faltered in the first quarter of this year, and the outlook has deteriorated due to the impact of load shedding. SABC's Business Confidence Index for March 2019 declined by 1.6 index points to 91.8. The rand exchange rate against major currencies interrupted electricity supply. Electricity tariff increase as well as slowing manufacturing output were the largest contributors to the negative trend. But on a positive note, this week, Nissan South Africa formally launched a 3 billion rand investment in the manufacture of the latest Navara model. The manufacture of the model from 2020 will create 400 direct factory jobs.
This is giving confidence to Nissan to continue to invest in South Africa and to get benefit from the strong and excellent level of skills we have now in the country.
On Thursday, Communications Minister Stella Ndabeni-Abrahams unveiled the Fourth Industrial Revolution in South Africa partnership and plans for the inaugural Digital Economy Summit. The 4IRSA is a partnership between Telkom and the universities of Witwatersrand, Fort Hare and the city of Johannesburg. The partnership seeks to stimulate and facilitate an inclusive national dialogue to shape a coherent national response to the Fourth Industrial Revolution. It also aims to complement and support other national activities relating to 4IR, most notably the recent appointed Presidential Commission on 4IR. The task of the commission, which is chaired by President Cyril Ramaphosa, is to identify relevant policies, strategies and action plans that will position South Africa as a competitive global player.
Let us make sure that the workforce will be ready for it, so that we don't have to be fighting with labor, fighting with whoever, because when those fights happen, it always has negative impact on the economy. Doesn't only affect families, but it affects the entire country. So it's important that we work together. Let us make sure that we're inclusive as much as we can, which is what we have tried to do in the 4IR Commission.
Lastly, the United Democratic Movement leader Bantu Holomisa was back in the hot seat at the Public Investment Corporation inquiry on Wednesday. This time around, Holomisa was being examined by representatives of companies Harith and Lebashe. These companies are linked to former Deputy Finance Minister and Chair of PIC, Jabu Mleketi, former PIC Executive Tshepo Mahlwele and Warren Wheatley. In his testimony, Holomisa questioned the conflict of interest with relation to former directors and employees of PIC. Holomisa alleges that there could be a cartel of BEE beneficiaries that seem to have easy access to PIC resources. The PIC Commission resumes on Monday. Diaboseto, SABC News.